Welcome to this free webinar, How to Find Investors and Raise Capital Fast, even though nobody's heard of you before. Now, this is not raising capital for VCs. This is raising capital with crowdfunding, and that's what we're going to talk about today. Here's what we're going to cover today. Who's this webinar for? Number two, who we are. Number three, why crowdfunding? If you're raising capital for your business, why crowdfund? Or if you've got clients that need to crowdfund, are investors waiting for me? Number five, the three most important questions to answer about crowdfunding. I want to set your expectations about what crowdfunding is. Number six, what is the cost of capital in crowdfunding? Normal times, if you become a CEO and you've got a $10 million, $100 million business, you always know there's a cost of capital raising. Number seven, how much will it cost to raise $5 million? And I'm going to give you some examples on that, help you set expectations. Number eight, how we help. So who's this is for? And you've got an operation, you're trying to raise money, you got an idea, and you can't find any big check writers in this crazy environment. You are not alone. You just started exploring methods to raise capital. Your current campaign is failed or stalled. There's a lot of people out there that raise capital on WeFunder. They go to Start Engine, or they go to Net Capital. They go to Start Engine. They jump around. You have momentum and you need more capital, meaning you've already got a business that's doing, $2 million a year in sales, $5 million a year in sales, but you just need more capital to take advantage of an opportunity. You want to leverage your community, meaning you've got a big list and you want to be able to maximize that. So you can sell customers to them, and you can also potentially, if they see your opportunity is good, they can actually invest in you. You want more control of your terms. Let's say you've been out there and you're trying to raise money from a VC and they want a board seat, they want a majority of the company. You want more control of your terms. That's one of the reasons why you do crowdfunding. You have a hard time asking for people for money. Now, a lot of people do this like, hey, would you be interested in investing in my company? You got to be able to do that over and over again. There's ways to do that with crowdfunding. Who we are. My name is John Stoddard, and I really appreciate you joining us here today. There's a lot of other things you could do. Choosing us means you want to learn something from what we have to offer, and I really appreciate it. I was the co-founder of TurboSquid. It's a marketplace software that's still number one in its niche. I bought a failing e-commerce company. It's called Century Hearing Aids. I rebuilt it, raised some money, and sold it to a private investor. I've helped raise over $22 million. That's for just my projects myself. I'm also author of a Pitch Deck Secrets. It's a source to help you write your story about raising money. And I've got Michael Brett. So just a little bit about Michael Brett. I'm going to bring him in. Michael is CEO of Small Cap Equity Advisors, a fee-based consulting firm. He's a Juris Doctorate for over 30 years. That's active and licensed in California. So we don't cross any lines. Don't ask us to take success fees. He's been in investor relations for over 25 years, and he's helped his clients raise over $80 million. And he's also the author of two books, Raising Capital for Your Business and Asset Protection Planning, both available on Amazon. I want to introduce you to Mike Brett today.
Thanks, John. This is Mike Brett. As John said, I've been in business over 25 years, assisting companies in accessing capital markets, whether it's through retail investors or institutional investors such as investment banks, family offices, and broker-dealers, way before the Jobs Act was passed a few years ago. But since the Jobs Act has passed, not only do I help publicly traded companies raise capital, but now assist private companies using crowdfunding, 506c private placements, and Reg A Plus offerings. And like John, I appreciate you joining the webinar today.
Yeah, so let me tell you a little bit of story here. Now, Mike and I haven't been partners for very long. My offer, I was running by myself, building a business, having customers, and I'm pretty sure Mike was doing the same thing. And then COVID hit, like it did everybody else, it kind of affected sales, customers, everything. So we actually teamed up together, multiplying our offer, trying to 10x the value that we bring to people. That's why we're doing this today. So why you crowdfund? Now, if you've tried VC, you know what it's like. You take this big, long, you have a big list of investors, 1,000 out there, you start contacting them, you go through all this big funnel, and then you may get it or cull it down to 2 or 3. One's a yes, two's a maybe. Crowdfunding is a little bit different. You're in control of the timing. When you start advertising, when you put your offer up, all of your actions. If you're pushing out your offer on LinkedIn or Facebook or Instagram, you're in control of that. And you're in control of your terms and valuation. You get to say, hey, my company's worth $3 million, because a VC might say it's only worth $1 million. And they could say, look, I don't need to sell 51% of my company to a VC and lose total control. If it goes south, they take a board seat, they could kick you out. It's happened over and over again. All right, you are also raising capital and acquiring customers, meaning it's one of the most important skills in any business. This is customer acquisition skills. And you're also simultaneously, if you're out there on LinkedIn and you're pitching your business or Instagram or Facebook, you're increasing your brand awareness. Number 3, you're adding campaign adds capital to your balance sheet almost immediately. I'm talking about you can have a CF campaign or a 506 or Reg D campaign in effect and ready to go live within 15 to 30 days. Meaning if you get a $10,000 investment, the first 30 days goes in your balance sheet and it's your discretion what you use those for. You can use it for more activities, or you can bring on somebody that needed to be in your company, a really important HR hire. Let me give you a case study right here. Neurotez. Neurotez is a Alzheimer's dementia therapy, and they did a raise on net capital. They hired us to do a little work for them, but they need $10 million to do a clinical trial phase. So we helped them raise enough so they can support a syndicate dealer, broker-dealer syndication network, meaning we need to find people with big checks. These are institutional investors. They can write checks for $5 million, $10 million, all in one day, just right there. So that's what we did for Neurotest. So when you get to crowdfunding, the really big question is, oh my God, I'm just going to put it out there and people are going to throw money at me. Is that true? Are investors waiting for me? All right, if you build it, will they just show up and invest? The reality is they just won't come unless they know you exist and you give them a compelling reason to come find you. They're not coming. It's like the Field of Dreams. The Field of Dreams is fiction. It's something you got to work on. An investor is only going to put money in your company if they know you, like you, trust you, and then they invest in you. So here's the 3 most important questions to answer about crowdfunding. Who my dream crowdfunding investor is. Where are they hiding, or where are they congregating? Meaning, are they on LinkedIn? Are they on Facebook? Or are they on Instagram? Or are they elsewhere? And how do I attract my investors to my offer? So let's talk about secret number 1. Who is my dream investor? This is one of the most important things you want to do. You've got to get clear on who your dream investor is. That is critical to your crowdfunding success. You've got to be able to know them, sit in their shoes, and know them better than they know themselves. Once you know them, it's a lot easier to find them. So you've got a customer, and you know who those are, and you're selling products. But you have an investor. A customer is always going to do, hey, what's my pain to pleasure? Does it increase my status? You've got to be able to fill that out. You've got to be able to answer that. But an investor is, how much money am I going to make? Really, I mean, a lot of these sites like Kickstarter, Indiego's, Those are crowdfunding sites. Those are great. But does an investor really going to get their money back on them? No, it's a donation. But when you do equity crowdfunding, there's some expectations you got to give that investor that there's going to be some kind of ROI. You got to be able to tap in to an informed, passionate user base. There's a little bit of convergence in there. There's a lot of customers that want to be investors. There are investors that might become customers. Let me give you a case study of my hearing aid company, Century Hearing Aids. Like, I had to find where my investor was. At that time, I was selling millions of dollars worth of hearing aids, and I said, look, if I want to go any higher on this, I need more money, marketing money behind me. So I was selling from 3 manufacturers, and I put an offer together for all 3 manufacturers. Goes, look, if you invest in my company, allow me to do more marketing, get out there on Facebook, get out there on LinkedIn, get out there on the channels and do more PR, I will go exclusive with you. One of the 3 took advantage of that offer, and we both made money on that deal. Secret number 2, where are they hiding? Where are they congregating? So we need to do 3 things. We got to split our traffic into 3 different areas. That's traffic you own, that's your list, that's your customer list, how big it is right now. Traffic you pay for, and traffic you earn. Traffic you pay for, number 2, of course, is paying ads on LinkedIn or Facebook or Instagram. And traffic you earn, we're going to talk about that. So, traffic you own. What's your list right now? Tell me about your customer list. Is it 100, 500, is it 1 million? That's great. If you don't have any traffic, you're going to go directly. And you want to do a crowdfunding event, you got to go to traffic you pay for and traffic you earn. Don't pass go right to it. Traffic you pay for, that's Google, that's Facebook, that's LinkedIn, that's Instagram. This is an actual Facebook campaign. I want to show you these numbers here. To get the ROI we needed, this is what we spent, $34,000 to hit $100,000 in investments. Traffic you pay for is not going to be simple and easy. Traffic you earn. This is likes, shares, followers, influencers, radio podcasts, SEO tweets, etc. Now, here's the benefit of this. Somebody that's going to write about you on a podcast or needs your information or needs a story, they need your story as much as you need them. The only downside, if it's a downside, is relationships take time. And I want to give you an example of this. I had a client that bought our course that reached out to a magazine with over 11 million subscribers monthly. It took nearly 3 months to get on their radar. So he had to send out a connection request on LinkedIn. It took about 2 weeks for that guy to actually respond and accept the connection. Then we sent an email saying, hey, we got a product. It took another 2 to 3 to 4 weeks for that guy to respond, say, hey, I'm interested, and then have a conversation and then get a product for evaluation. It takes time. Anytime you do this, traffic you earn, it takes time. What you really want is a convergence of the media, doing all of them. You want traffic you own, traffic you pay for, and traffic you earn, because it's like a 3-leg stool. If you only do traffic you pay for, your cost of capital, your expense of advertising is going to be expensive. If you only do traffic you own or traffic you pay for by themselves, it's just not going to work. You need to be doing all 3. Let me give you another case study, Ionic Brands. They're a current client of ours, and we did a pre-IPO raise for them. That's John Gore's Ionic, and it's a cannabis company. We do all sectors, but we did a lot of IR type work, like interviews, talking about questions like, how'd you build it? Why'd you build it? What happened? Like, what overcoming disappointments? And then we split these interviews up, and just kind of put them out on LinkedIn, because that's where we found all investors for the cannabis industry allowed to post. I don't think you can post on cannabis on Instagram or Facebook. Anyway, I know a lot of people get kicked off of there. Secret number 3, How do I attract investors to my offer? So you want to be this guy, and you want this investor here, and you want to take this bridge to this investor over here, and making sure that they feel good about the investment and an investment that agrees with their worldview. So this is, ladies and gentlemen, this is advertising. You're advertising for investors. And every advertisement, it's got to have some kind of hook, meaning every post, picture, video is used to get an investor's attention, just like a bait and fishing on a hook, to engage with your content so you get the chance to tell a story and make a connection. Because people connect with people they agree with and their worldview. It just doesn't happen. People, right now, you can see it right now, you know, more and more people, like Republicans gravitate towards conservative websites, and Democrats can gravitate towards liberal websites. It's just natural. It's what we do as humans. And number three, you got to be able to have a great offer. The offer needs to be irresistible value. Now, when you do an investment offer, you're limited by what the SEC, what you can say about your offer, but there's ways or not around it, but how you say it that fits within the SEC. Remember, my colleague, Michael Brett's a Juris Doctorate, so if we do anything for you, we don't go outside those lines. So remember, every piece of marketing has to have a hook, story, and offer. So let me give you a case study, and that's why you're here right now. I post a lot of valuable content about what I've learned in raising investment from LinkedIn. And I move people to this webinar, and I move them right to this. This is what you do too, because even the biggest guys in the industry, like CrowdStreet, they've raised over $1 billion for some of their companies. They have an offer up, and it moves to a webinar, so the developers of that property get to talk about that. So here's some content ideas. I just want to show you this a lot of slide. You can provide value in each one of those. You've got, you know, awards, you got funding, major hires, partnerships. There's all kinds of things you could talk about that can get you noticed, can get you followers, can get you people engaged in your content, that can get you investors. So here's a case study, and I'm going to let Mike kind of lead on this. He is the lead on Apex Farm Corp. They did 427% oversubscribed on microventures.
Yeah, real quick. Apex Farm came to me. They were basically a startup. They need to raise about $50,000 so they could build some prototypes. So we put everything together, the business, the videos, got the attorneys to put together the legal work to put up on microventures. And then I started to market it, and in 60 days, we raised $215,000. Again, they only wanted $50,000. We ended up raising $215, and then they used that money to pay the lawyers to do a Reg A Plus offering, which they raised substantially more, several $1 million on their Reg A. So it was a stepstone type financing, but it was startup. We did our social media posting. I reached out with emails, made some conference calls. I got people looking at their website and their vertical farming technology, and it worked.
Well, Mike, tell us a little bit about identifying who their customer is, because it's really important they understand, like, who did you key on and what social media platform were these people hanging out with? The same.
Yeah, great question. I went to Twitter, and I went to my other network, and just reached out to people with the link to the microventures. I went to urban farming, rooftop farming, hydroponic farming, interested in urban farming, different categories like that, and restaurants who were in the cities who wanted to grow their own herbs and vegetables, and they had a space on the roof of their building. They could put the unit up there. So I did all those different outreach programs, and like I said, within 60 days we had over $200,000 raised, and the goal was only $50,000. So we had to identify who their primary category happened to be, who was interested, who was already in that space. They were already doing it. They were looking for something better, something more productive, and something less expensive. And that's how we reached out to them.
Yeah, so identify who your dream investor is. That's the first thing. And then as soon as you do that, it's a lot easier to find out where they're congregating. All right, so what's the capital? What is the cost of capital in crowdfunding? So we looked over this, a number of sites. We got some figures from Republic. Republic's making some really big waves, signing on some kind of celebrities to do this. The average CF raise was 330,000 K. When you do a CF raise, the max is 1,070,000. The average CF campaign cost those companies about $46,000. That's 13%. So if you're going to try to raise $330,000, it's going to cost you about $46K to get there. And a Reg A, the averages we looked at were about 300,000 to 2 million, and it took anywhere from 10% to 30% amount raised. So if you looked at that, it cost almost $600,000 to raise 2 million. That's just an average. And my source is Republic there. So let me give you some examples on numbers to raise $5 million. Just some examples. So one person writes a check for $5 million. Two people write a check for 2.5. 5 people write a check. 200 people write a check for 25,000. 5,000 people write a check for 1,000. I'm just trying to show you a picture of what that looks like to set your expectation. Here's another case study from Tequila Commissaro. Mike was the lead on this. He's raised 15 million, or helped clients raise 15 million for this.
I thought it was on mute. Yeah, what we started with zero 5 years ago. The company didn't have any distribution sales, didn't have any ability to raise any money. So we started out with branding the company, getting the company in front of different competitions where they would win double gold for their different blends. We got them written up in national magazines. I got them on Fox Television, interviewed on Fox Television and some other smaller local stations. We started setting up our booth at different trade shows to establish the market and overcome the objection. Oh my God, another tequila! This is an ultra premium tequila. Now, when you say that, it doesn't mean a lot until you taste it. So that's why we had to enter a lot of competitions. Fast forward to now, we went from zero to distribution of our product in 30 states. We got the MGM Grand Casinos in Las Vegas, which are 16 casinos to handle the product. We got Cisco Foods, which is a $60 billion food and beverage distribution company, to pick up our product and distribute it. And we're doing a sales training on a monthly basis for all the reps of Cisco Foods. Now, the reason I say that is all those steps along the way established the brand, conducted sales to the tune of about $2 million in sales, and allowed the company to attract investment capital of over $15 million. So you're not only reaching out to investors to have them write you a check, you're reaching out to the consumers and other individuals and people to get them interested in your product, so they go out and buy it, they use it, they understand it, then they contact the company and say, I want to invest. So it's a sales marketing approach that we take with everybody.
Beautiful. All right, so let's, here's some more mathematics. It was like, oh no more mathematics. But this is the conversion ratio. And these are digital marketing averages. I'm just giving an example. These could be high, low, they could off the mark, but it's kind of an average. So if you put out ads on there on Facebook or LinkedIn or Instagram or Google and you get a 0.25 conversion ratio, and you're trying to get 5,000 people to write a check for 1,000, that means you have to get in front of 2 million people. That is a lot of money. 0.5, you got to get in front of 1 million. 1%, you got to get in 500,000. 2%, you got to get in front of 250,000. What I'm trying to show you here is why it's so important to make sure you identify who your dream customer is. Because you don't want to have 3 or 4 markets out there going, it's good for this industry, it's good for that industry, it's good for that industry. No, You want your early adopters, you want your passionate ones, you just want your raving fans. That's identify who those people are and then find out where they're congregating. So let me give you another case study. This is Lucas Energy, and Mike was the lead on that, and he's helped raise $20 million for that project too. So Mike, tell us about that.
Yes, Lucas Energy at the time was a small cap public company, took them public on the OTC markets. They eventually qualified to get uplisted to the American Stock Exchange, which was later acquired by the New York Stock Exchange. But we really took them on the road. At the time, this is way before the pandemic. We did a lot of road shows. We did a lot of investor meetings, and they went from zero in being able to raise capital to raising over $20 million. We raised money from Roth Capital. We raised about $7 million from TriPoint Global out of New York. We raised $1 million from Hamburg Quest. And all of it because we got the stock price going from 40 cents to over $5. We got out and brought in 8,000 new investors into the company. They only had 500 shareholders when we started. And then we brought in 8,000 new shareholders, some of which came directly to the company to buy the shares. The other ones bought it on the open market. All of that buying created liquidity in the stock that the investment bankers and family offices were interested in, and the pension funds, they came in, and we raised about $20 million. All that process took about 18 months. But again, it was a lot of travel time. Then, way before Zoom really was anything, we went out face-to-face with people. So it was outreach, marketing, find the people in the oil and gas sector, and convincing them why this was a good deal, because at the time, the president of the company was a real oil man. So I could get him in a room with oil analysts, and he could answer the questions of who they are, where they're going, and how they're going to get there. And that's how we got people interested in supporting the stock and making an investment.
So there, you see the themes there. What I'm trying to show you again is nobody's going to invest in you unless they know you, like you, and trust you. And what Mike did here with Lucas Energy is find out where their customers are, and where they congregate. And then he used the hook story offer for each one of those. Just happens to be the way to market to this big type of customer was roadshows, getting in front of people, saying, hey, we've got a really good story here. Would you like to meet and talk about that? That's exactly what Mike did. So here's how we can help. I'm going to take a few minutes, if it's okay,